All right, how we looking? YouTube ready? All right guys, what's up? It's Sterling here from Day Trading Forex Live, and this video is going to be an important video. I've probably in 15, 16 years of trading, I started trading when I was 17. I'm 32 now, I'll be 33 in April. And in that time, having run Day Trading Forex Live for the last decade, what I can tell you is I've spoken with probably 50, 70,000 traders in that time, and in that period, you learn what retail traders do consistently, the ones that are losing. You also learn what the traders that come to me and eventually are turning a profit, what do they do? There are common denominators, and this video covers the three that I think are the most important. I don't care what trading strategy you're using right now. What I'm going to cover in this video is going to help you. Let's get to it. All right, number one we're going to cover here is WTP. No, I do not mean white trash party. What we have here is a written trading plan. A written trading plan is number one. If you are trading whatever strategy you're trading, whatever time frame you're trading, don't really care personally. What I do care about is that you have a written structure that you are using every day. When you're about to enter a trade, you reference your trading plan. Hopefully you're referencing it physically, but if not, mentally referencing that trading plan, which eventually you'll get to. You don't always need to look at the plan, but especially in the beginning, do you have something you're referencing when you're about to take a trade? If you don't have a written plan right before you're about to take a trade, the consistency of your actions, I'll phrase it another way, the consistency of your actions is heavily dependent on you having a structure that you follow. If you don't have a process, a structure, a plan, whatever phrase somebody wants to put on it is irrelevant to me. But what gets you into a trade? How do you manage that trade once you're in it? What's your set stop loss and set take profit when you get into the trade? What causes you to exit the trade? Anything else that is a critical factor to profitable trading. If you don't have a written trading plan, guys, this is number one. If you don't have a written trading plan, I say it another way, then you really shouldn't expect to be profitable. If you're not profitable and you don't have a plan, that's a starting point, no matter what strategy you are using. Which, by the way, for right now, I'm running a promo on Day Trading Forex Live. During that checkout process, if you enter the coupon code PROFIT, it'll knock the course down, or the price of the course down, to $199. I don't know how long I'm going to do that for. I've been running Day Trading Forex Live for a decade, and $249 has always been the best price we've ever offered. But I want to do this during this outbreak just because there's so many people at home. There's so many people that have wanted to make that transition to trading who need the extra guidance and support. If that's you, check it out. But let's get back to this here. Number two in that process, a written trading plan is just the start. What you have to have after that is you need option number two. And option number two, or point number two, is this right here. You need to be journaling those trades, and everybody journals trades differently. The way you're journaling the trades is not, it's not like a definite, this is the right way, that's the right way. However you quickly review your trades, then journal them that way. I don't care how you journal your trades. Some people do it with just a picture. Some of my members will post a picture, and since we trade off predetermined manipulation points, they'll list out the level that was selected. They'll draw the stop run or circle the stop run, and then maybe write any comments on the back of that piece of paper. Some of them do it physically. I like the physical journal. Some of you guys like the online journal. Everything in that regard is just preference. The biggest thing is that I get you guys to start journaling your trades. If you're not journaling your trades, it's like, I don't even know what you'd compare it to. I mean, there's a reason why after a flight, I'm a pilot or a private pilot, you do a bit of a debrief. You reconstruct that flight. What did I do right? What did I do wrong? Especially during the learning process. I always talk about surgeons and how when it comes to that process, I usually talk about that in relation to the training aspect, but even still, reviewing past surgeries, what went wrong, what went right, because that review process is critical. It allows you to remember what's actually going on. I can assure you after 20, 30 trades, you're not going to remember everything you might have done right, everything you might have done wrong. This allows you to see something that I think is just critically important, which is this right here. It allows you to see patterns. It allows you to see patterns both good and bad. Some of you guys are going to, or not some of you guys, 95% of you will notice one thing. And I know this is a gut check. This requires an honest examination. 95% of you will never have a period in your history, your trading history, where you place 20 trades in a row that perfectly follow the plan, the written trading plan. That is a scary statistic. Check it yourself if you like. What'll happen is you'll place trades according to the plan if you do have a written plan. And then what will happen is after a loss, or maybe after a couple successful trades, you feel like you know what you're doing, and you start taking an additional trade. That ends up as a loss. You get pissed. You go to the double down, the revenge trade, the boredom trade, the jump on anything that's moving trade. And you do it in an effort to make back what was there. And whatever process you go down, we all tend to have things during that learning process that we did. I know I did personally. I would have a loss, get extremely pissed over the loss, think about how much I had to make back just to get to that point. I'd double position sizes, just, you know, same thing you guys can probably all relate to. And you cannot trade profitably if you're doing that. I don't care what strategy you use. It doesn't matter, because if you're making those type of errors, that's impossible to overcome. It's impossible to overcome that because the best strategy in the world, if there was such a thing, it's not profitable if the person trading it isn't trading it consistently according to, number one, their written trading plan. So journaling trades is critical. If you don't have a written plan, that's number one. Number two is journal every single trade you place. This keeps you accountable. And at the end of the day, guys, I'll get the question of, well, you know, how do I stop myself from revenge trading? I'll be honest with you. When it really comes down to it on stopping these things, only you press buy or sell. I don't care what educator you have. I don't care if your broker was telling you to buy this or buy that. You, and you alone, just the same as me and myself, me alone, are responsible for the results that I achieve. So that is critical to accept. The only way you're going to accept that is if you see your actions, or a good way to accept that is seeing your actions and seeing the results that those actions bring. If you want to progress in trading, this is what you do. If you never want to see that you're the cause of your losses, then don't do this, because this will point it out very clearly. Number three is the monthly review. The monthly review is critical. The monthly review is what really makes all of this mean anything. I shouldn't say that. It allows you to see what's going on in that. It allows you to calculate things like, what is my actual reward to risk ratio? Because you might go into trades with a 2-to-1 reward to risk, but if at the end of the trades you're closing your trades early because you're scared of giving back some profit, you might have a actual reward to risk of 0.5 to 1. You might be running a negative reward to risk ratio because you consistently close your winners too soon and you let your losers ride, which is a very common trait. So that allows you to check things like that. Your win-loss ratio, again, reward to risk, win-loss. Your money management patterns, what are you doing? Are you doubling from one position to the next? Are you keeping a consistent risk per trade? So it allows you to analyze all the things you're doing right. That's key. It also allows you to analyze the things you're doing wrong. What I would encourage you to do is, number one, just to follow this pattern. This pattern, regardless of strategy, will give you the best probability of success. I don't care what strategy you're trading right now, you know, whatever it might be, this pattern has to be followed. This pattern is followed by professional traders, and it's followed by professional traders for a reason, because this is a business, and that business has to be operated in a certain way. There are people that came before you that have proven a profitable model of how to become successful. And this is critical because there's never, and maybe the key point to summarize here is that you will never learn a rule or set of rules, or you'll never buy a strategy, then learn that strategy, and then suddenly you're a profitable trader. There's no rule set that makes somebody a profitable trader. There's always a level of discretion. And I know that's discouraging. I know that could be discouraging to a lot of traders because it's a common belief that the thing you're missing is the strategy. I can promise you that you will never find a strategy that will just make you profitable, number one. And there is no such thing as a set of rules which once learned automatically make you a good trader. The process of becoming profitable, I know profitable traders that trade long-term price action signals. It's not the strategy I trade, not what I recommend, but I know him and I know he's profitable. I know traders using volume profile to trade profitably. Not purely what I use. I do use some volume metrics. Volume profile I think adds value, and there's different ways to do it to track smart money. The point being is I know many profitable traders that trade different strategies. And what is common among them is this right here. They follow this pattern. They wrote the plan, they journal all those trades, they then review those trades monthly, they see what they're doing right, they see what they're doing wrong, they edit the plan as necessary. There might be certain things that you're doing right or doing wrong that require an edit to that plan. And as you do that, you go through the next month, you checked every trade against that journal or against the written trading plan. You journal every one of those trades and then you review it again at the end of that month. There is no quick process to this, guys. I wish there was. I wish I could just tell you it's easy. The fact is the rewards of the Forex industry are incredibly great. I'm 32. I've never worked for the man. The Forex industry has been just an incredible blessing to me, and being able to turn an income or to turn a profit, which is an income that can't be taken away, is something that it's a massive reward. If that was easy, I can promise you everyone would be doing it. There's a reason why there's such a high failure rate, and it's because that's difficult. It requires your effort, it requires your time, and it requires you accepting that your results are your responsibility, regardless of who you've learned from, regardless of the strategy that you're trading. If you're profitable, I'll phrase it another way. If you're profitable, are you going to say, I'd like to thank every other person around me. I'd like to thank the broker for providing a fair trading environment. I'd like to thank all the 20 educators I learned different things from. I can promise you, you won't. You're going to say, you're going to feel proud of your profitability, because regardless of who taught you, regardless of the broker or anything else, you got yourself to profitability. If you're going to accept your profits, you need to accept your losses, guys. And it starts with this. It starts with really analyzing your trades. I hope that gives you a breakdown of how I do it, how the best traders I know do it. And I'll see you all back for the next video. Until then, happy trading.